And joining me now for the latest in the cryptocurrency space from San Francisco is Matt Hougan. He's a Chief Investment Officer at Bitwise Asset Management. Matt, it's always great to see you, and certainly a good time to check in because we have seen a lot of volatility, to be frank, in the market of late. What has it meant for crypto?
You know, crypto's actually been doing exceptionally well from my point of view. Usually, historically, when we see major equity market drawdowns in 2018 and 2022, you saw crypto fall more than the stock market. This time, it's about been keeping pace. It's actually down less than the stock market since the start of this pullback. I think that suggests that there's an underlying positive bid for crypto. And whenever this macro uncertainty and broader market volatility calms down, I think Bitcoin in particular is well positioned to move back towards new all-time highs. So I'm seeing resilience in this market from a crypto perspective.
It was just a few weeks ago, Matt, that a guest had joined the show and said that he was seeing a lot of correlation between technology stocks and cryptocurrencies. Is that a correlation that you've seen as well? And if so, is that a correlation that has held up of late?
Correlations have gone up from historic norms. So usually in the crypto market, the correlation between, say, Bitcoin and the NASDAQ or Bitcoin and technology stocks is very low, about 0.25. Recently, it's been up about 0.5 or 0.6, so higher, but still not perfectly correlated. The reason for that is these macro shocks are so large, they're impacting everything, right? It's hard to tear yourself away from the screens, so it's impacting all assets. I do think as we go through toward the end of the year, as we sort of accommodate to this new tariff regime, you're going to see more decoupling between crypto and stocks, but we have seen correlations a little elevated over their historic norms.
So cryptocurrency and gold, we talked about obviously a correlation perhaps between technology stocks and Bitcoin, but what about for someone watching the gold market and Bitcoin? What can you tell us there, Matt?
Yeah, what gold is telling you is that the global demand for store of value assets, for safe havens from the US dollar, is growing significantly. That's why gold is up and setting new all-time highs. I think that's leading where Bitcoin is going. Bitcoin's this unusual asset. It's both a long-term hedge asset, but in the short term, a risky technology because it's a volatile asset, it's a new asset, it's an emerging growth asset. So from the short-term perspective, Bitcoin has pulled back a little bit, but I think gold is pointing the direction where it's going. My price target long-term for Bitcoin has gone up as the price of gold has gone up. So think of gold as a leading indicator of where we might be after this market uncertainty levels out. It's going to pull Bitcoin up with it.
Interesting, Matt. So how has your forecast for Bitcoin changed? Do you see it above 100,000 by the end of the year?
I'll double that on you, actually. I think Bitcoin's going to end the year above $200,000. Look, there is still a systematic mismatch between demand and supply in the Bitcoin market. The Bitcoin network only producing 165,000 Bitcoin. I think ETFs buying multiples of that, corporations buying multiples of that. I expect governments to buy multiples of that this year. So I think, again, once this macro uncertainty levels off, the crypto market will realize this is an incredible moment. We have new regulatory clarity. We have the US with the strategic Bitcoin reserve. I think definitely above 100,000. I still expect it to get above $200,000 by the end of this year.
Interesting. Now, what is really driving the price of Bitcoin, Matt?
Well, I think there are a couple factors. One is degrading trust in institutions. Every time investors wake up and realize that they're idiosyncratic people at the helm of this economy, making decisions one day and peeling them back the other day, that makes them look and hope for something that's more steady and secure. Every time faith in the dollar, every time debts go up, people want an alternative, and that's boosting demand for Bitcoin. But the biggest factor is Bitcoin has been this incredible asset over the last 15 years, but institutional investors have been kept out of it because of regulatory concerns and other risks. Those evaporated over the last 6 months. That means institutions need to move hundreds of billions of dollars into Bitcoin, and that gives it that persistent bid. That's why we're seeing it be so much more stable this pullback than it has in the past. And again, once we stabilize from a market perspective, I think that persistent bid will push it steadily upwards.
Matt Hougan, Chief Investment Officer at Bitwise Asset Management. Matt, great to see you. Thank you.
Thanks for having me.